Hello, everyone. John Coleman here. Hope you all had a good bank holiday weekend. So, what's been happening in the mortgage and property market in the month of July? Well, quite a lot actually. As signalled, the central bank increased their interest rates, but they increased them by 0.5%. So they went from 0 to 0.5%, which was the first increase in nearly over 10 years. They still are at a historically low level. Um, the expectation, though, initially had been that the rate would go up by 0.25%, but in the couple of days before it happened, there was actually talk of maybe 0.75%. So they they stuck with 0.5%, with again signaling that they will review this again next month. Why are they doing this? Well, ultimately, they're looking to conquer inflation. It's getting out of control in Europe at the moment, and they are using their interest rates as a mechanism to bring inflation in line. How quickly that happens will ultimately dictate future interest rate activity, and then whether they will go up or not. So, what impact is it likely to have on the property market? My own, again, personal view is um, it will have a reduction in the rate of increase in prices. So for why? Well, certainly some people will actually will hold fire buying purely because it creates a little bit of uncertainty. So people will hold off making big decisions when it comes to interest rates. If they're going to go up, they will maybe think that their prices are going to would fall, and they'll postpone making a decision. Other people basically, well, the gap between rent and your mortgage will have reduced. So again, the motivation to buy may fall a little bit. Um, but ultimately, my own view on this is um, I don't I don't see the prices falling, purely because the gap between supply and demand is so big. So for the next 18 months, at least, I still, as I say, will maintain that the prices will not fall, but will the rate of increase will fall. So that will be my own view. Would I excuse me? Would I buy myself? Well, again, as I've always said, if I'm taking a long-term view, and what I mean by a long-term view is 10 to 15 years view, I'd have absolutely no problem buying right now. Um, Whether my house is worth 50,000 more or 50,000 less next year or the year after, it really wouldn't make any difference because I'm not going anywhere. Now, if I was taking a more short-term view, as in the next 5 years, then I might be more circumstantial around buying. So that's just, again, one man's opinion. I don't want to pretend I'm an economist. That would be just me assessing what I see the supply and demand that's currently out there at this point in time. So next, the next big thing that's happened is the commencement of this new shared ownership scheme. Now I'm going to be doing a separate recording on this because there's a lot of detail to it. But in summary, basically, it's a scheme that's aimed to help first-time buyers bridge the gap between their deposit, the mortgage they get, and the cost price of the house. In theory, they can get up to 30% of the actual cost price in a shared ownership basis. Now, if they take the Help to Buy, that's reduced to 20%. So as I say, there is a lot of detail to that, and I will be doing a separate recording on it, but certainly something to be aware of if you're looking to buy a new property and you feel you can't make it happen. This shared ownership scheme may be the mechanism for you. But as I say, I'll give more detail on that separately. So back to my old favorite chestnut, banks and their service. Well, currently, I regret to inform that the service has certainly gone backwards, and banks are now taking sometimes, well, up to 3 weeks to say, give an approval. Other banks are now taking between 3 to 5 weeks to give you the same level to get an approval. So that is very, very poor. Obviously, there are reasons for that. One being a lot of people were looking to close deals before rates went up. We're in the summer season and they're obviously short-staffed, and ultimately the demand is continuing to skyrocket. So hopefully this is only a short-term measure and the banks will get themselves back in track, and a reasonable timelines will be provided to one and all. So there we go. There's my report for July. As I say, a lot going on. I'll certainly be keeping you updated as to what will be happening in the interest rate markets in the near future. But as I say, if you have any questions at all, just drop me a line and I'll be more than happy to pass on my advice to you. So thank you for listening. Hope you got some value, and till the next time.